of June, the day after Brexit. Brexit was a fantastic trading day, but it was crazy. Just crazy, right? Just absolutely total bedlam. I'd click the button and make 200 or 300 pips in, or lose I never lost 300, but no. How about this? I would click a trade with 100 pip stop loss and lose money in less than 1 minute. You're like, oh my God, did I just lose 100 pips? And then all of a sudden, boom, you make 100 pips, make 100 pips, make 100 pips. Oh my God. Literally on Brexit, especially in the Asian session, I was doing like 100, 300 OCOs, and they would only last like a few minutes. You're like, oh my gosh. So anyways, today wasn't that crazy, but I did scalp. I think I'm 22 for 22. But whatever. So just what happened was today got going and the British pound kept falling. Well, no doubt. I mean, I don't know what else you'd expect, right? So just lots of, where's it going to bounce? I don't know. Is this something to hold forever? I don't know if it's going to continue all day, all week, all month. I feel really naked without weekly and monthly pivot points. And we will go over the new weeklies, and I'll tell you why I kind of like I'm cautious about them. The spreads are, somebody said that last week too, where they were like paying 30 pips on the pound dollar. That's redonkulous. You didn't have to do that at TradersWay. Absolutely did not. Now, spreads were higher than usual because we had unusual markets, and the interbanking system had higher spreads. So, but I don't think I paid more than 10 pips. So someone here was paying 30 pips with some other broker, and that was just unfortunate is the nicest way of saying it. But that's the higher spreads is not manipulation per se, unless you're paying 30, and that's just stupid. But that's the situation in the interbanking system, right? Right. So in any case, another good trading day, and I don't know if it's going to last, another week, another month. So let's try to figure it out over the next few days and stuff like that. So without further ado, let's get ready for another great trading day. We can go over the commitment to traders report. We can go over the calendar. We can go over some weekly pivots. We got to hustle. Yeah, Marina. Most brokers lowered leverage and such. So welcome to Forex.Today. Thank you for visiting the site and collaborating. That's what it's there for. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. You can follow me on Forex.Today. You can subscribe to the videos on YouTube. You can like, you can share, you can comment. But I'm around, I'm available, and I'm here to help you. So I've been trading currencies for a long time, and that's why we do these strategy sessions, so I can clarify some of the complexities of the market and of trading and being a trader. We do these sessions every day, 7:30 in the morning, Monday through Thursday here at Forex.Today, and every Friday at FX Street for premium members only. And also at FX Street, I am Forex Speaker of the Year. So what I'm trying to do with these sessions is trying to earn your loyalty, make you a better and more confident trader with real skills, and one day you'll open up a real account at TradersWay.com. There you go. There's my secret. I'm trying to lure you with love. All right. So we do have a lot going on in the world. Thank you again, like I said, for sharing some of your trading ideas and strategies at Forex.Today. Remember, you can like, you can view, right? You can leave comments, right? Make sure. Thank you. And of course, if you like what Dan is doing, you can check out his other stuff. You can click to follow him so you're updated when he adds new analysis. So he's building his own community here, which is better than waiting for an email that comes 4 or 5 hours late, right? So get involved, share your ideas and analysis, and then support each other. Another thing, I was surprised during Brexit. I was pretty busy, so I couldn't really do a webinar, and I didn't actually think I'd be up all night, but I was up all night. And I shared in real time and collaborated through the activity feed, mostly by myself apparently. But I was sharing the news as it was coming in. Also was doing this. Korea was jumping in and intervening. I was all doing this in real time. Here's a scalp with 100 pips. Here's another one with 300 pips. And I was sharing that in real time. So you can also do it that way, and it's super easy because, for example, to share maybe a chart that you want to just talk with someone, share with people and discuss, maybe not a full trade plan. You just click that, drag the image right here. You don't even have to click the upload button. Just drag it there, write your comment. Boom, like literally done in seconds. So again, get involved, huh? All right, so today let's start with the calendar. Take a look at our risk events. I think I lost my drawing tool though, so let me fire that sucker back up. And here's the new and improved calendar. Nice. Oh, thank you, Marina. Okay, so how do I filter this out? Hang on. Oh, I think I already did it. All right, so I already have it filtered. All right, no wonder. Okay, now going through New Zealand here, starting the day, or starting the week. Trade balance, yada, 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 import, export. Yeah, okay, fine. You're going to do whatever you're going to do with Kiwi. You're either buying these huge dips on like Kiwi yen, or you're not. I tried to buy it at 70. It went from 70 to 73. It's now down to 71.80, so it just dropped below 72. So it kind of has to fall 200 pips before I can buy it. But, I've already made that decision. So that's why I'm like, if you're waiting for monthly trade balance out of New Zealand, I guess you haven't quite formed your opinion, and that maybe will push you over. I doubt it. And then we go into the PMI stuff. Okay, that stuff starts coming in for the U.S. Okay, retail, some numbers out of Japan. Again, all of this sort of like, not really that important, in the context of what's going on this week. We already got this idea coming out, stress test. We already know that that's going to be fine. ECB speeches, that's always going to be important. Okay, and then I just kind of want to skip ahead here because I think even though GDP doesn't seem to move the market, let me answer Nick's question. Do you think it's wise to continue buying those dips? If you're a bull, yeah, why wouldn't you? So out of like the major currencies, it has the highest yield. So if you were going to buy something, wouldn't you buy something with the highest yield? I'm not saying you should or you should not. Well, okay, so Nick says we're wondering if the pound overshadowed. Well, you know, has the economy in New Zealand changed radically in the last 48 hours of trading? No, nothing's changed at all, except the value of the New Zealand dollar is significantly cheaper. It was worth 77 versus the yen, and it dropped to almost 67. So it's like, well, if you were a buyer last Wednesday, maybe you'll buy it this Wednesday, but at 10% cheaper. You know, so you make a decision. I'm not saying that that's the right thing, but I doubt. Right, the point I was making is I doubt that, you know, the news, the Kiwi news, is not going to really make much of a difference, right? You've decided or you haven't decided. Okay, so anyways, going back to this, gross domestic product out of the United States is something that is closely watched. Okay? And that could be interesting. It's usually not a huge market mover, but it's of supreme importance. Okay, so you should watch it. Everyone's going to watch it. It is very backward looking, but nonetheless pretty important. But you'll see that it's listed here as medium. You know, it's important. It's probably not going to move the market, but it's important. I'm actually going to download it and go through the spreadsheet. I know, I'm crazy like that. Case-Shiller, again, used to be supremely important when we were worried about the U.S. Real estate industry. I shared with you about a week ago that I did some research and found out that almost 300,000 people went back to break even as far as the amount of money they owe on their mortgage and the value of their house. 300,000. And I said, well, if this continues, imagine all these hundreds of thousands of people re-entering an economy where they might actually buy a new fridge, redo the bathrooms, you know, put in a swimming pool. There's like every third house, it seems, around me is putting in a brand new swimming pool. I've actually seen a house remove a swimming pool in my neighborhood. I'm like, what? I wonder if that's a special skill. But, you know, like, when does money start coming back in? Where's the new money, right? We're always talking about where's the new money coming from. Well, there's 300,000 people that are now less broke. Now they're like, hey, man, my house is actually going up in value. I rode out the market. I was smart. Now I should invest into my house, right? Now I could refi. I don't know. So that's new blood, right? Oh, and the other thing I wanted to mention, since I shared that with you, the new median home price in the United States has now hit an all-time high. What? We went from the end of the world, what, 6 years ago? To suddenly an all-time high in the median home price. All-time high sounds like a lot to me, right? So anyways, do we really care about Case-Shiller? Well, as long as it's not going down. Everyone likes the good news, I suppose. But again, I don't think it'll be a huge market mover. It was for a while. You know, but Case is from Yale. Or I mean, Schiller's from Yale, so. But besides the point. Yeah, he also won a Nobel Prize. But besides that, yeah. Then consumer confidence, okay, that's great. This is, you know, fine, good. But, you know, you put all that together, GDP, how important are home prices to GDP? Well, as far as, you know, consumption and expenditures and durable goods, and, you know, supremely important, right? And that would lead to confidence and, you know, great. Industrial production out of Japan. Well, that'll be interesting, right? Home sales out of Australia. Okay, good. All of these are like opportunities. Maybe they lubricate the markets. I don't think they're going to be big market movers, but if the market wants to move and there's no giant surprises out of those, then it'll make it just that much easier for the market to move, which is good. Okay. What you don't want to have is like lots and lots of supremely high pieces of news back to back to back, because then you'll get the pop and stop, reverse and stop, that kind of stuff. And of course, all before that, you're going to get Draghi flapping his gums, right? How is he going to save Europe now? I don't think it was ever Draghi's problem. I think it's the governments of the European Union. Yeah, and I don't know. Maybe that is either the EU's giant strength or giant weakness. We don't really know, but now it's like left to, France, Spain, and Germany to run the European economy. I mean, when has Spain, France, and Germany ever done anything together ever? Is there one example someone could think of? The big Spanish, French, German partnership of 1722. What? Right? Did they assassinate a pope or something? Remember, Europe had two popes for a while, one living in France and one living in Italy. They played in the World Cup together. Boom! Thank you, Sally. Yep. It was probably all the English that ruined it, right? Those soccer hooligans. So anyways, yeah, so good luck, Europe. Okay. So meanwhile, I would just hope that, the pound is just going to keep going. Oh, yeah, I'm short euro, by the way. And I just realized it just moved 30 pips. So, yeah, so I'm just going to hope that the pound just keeps moving down, moving down, moving down. I'm going to be worried about 130. But whatever. Right? That's it, whatever. And I don't know, these weekly pivots and monthly, so we'll have to go over them because we're really in a strange place. So that's why I'm just like scalp, 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 scalp. And apparently now I'm 23 or 24 in a row. Nice. All right, so we'll go into that in a second or in a few minutes. What do we want to focus on here? What is this, Wednesday? Well, remember, it's oil inventory day. Canada's been crushed. The dollar strength, the union collapsing is not good for macroeconomics. It's not good for growth. So that slows down commodities. Oil is back down to $47. And looking like it wants to go lower, which is kind of cool because that's what we had planned about, right? Yeah, what about the S&P 500? And then even here's the biggest question. Nick says, what about the S&P 500? What if you were getting out of the S&P 500 at the all-time high or near the all-time high? And, is anyone thinking about buying European bank stocks? Really? Never thought about it? Like, something you would hold forever? So, like, for example, I bought Bank of America at like $4.70. I think by the time I get it all done, I think I averaged out at $5. Do you know what my target is? No joke. I bought Bank of America at $5. The goal was to give it to my children when they graduate from college. When was the last time you made a trade like that? When I was a young man, I went to Napa and I bought my I bought 2 bottles of wine. One bottle was white, one was red, with the goal of holding it. You know, I'm a young man. First time I ever bought wine to keep versus to drink. I was barely old enough to even to buy it legally, right? The white wine the next year became Wine Spectator's wine of the year, and they had a full cover, and you know it's a big magazine. The cover photo was of the white wine that I bought the year earlier. I'm like, oh my god, I bought my first bottle of wine I ever bought is the wine of the year. Oh my god, right? Like, how lucky is that? I just found the red in my basement. I'm like, oh, what is this? It was like finding the Ark, right? The Ark of the Covenant. Oh my God, this is the Ark. There it is. I totally forgot I had it, right? And I look it up, and it's now considered the first cult wine of Napa Valley. And I'm like, oh my God, I bought the first cult wine. Oh my God. It's like 22 years old or something. I need to drink it. They never sold it in stores ever. But you can buy it at auction, but it's old enough now where it may be too old. So I don't know if I drink it, that'll be cool. But what if it's bad? Then now I just have this empty bottle. I should just keep it forever. But the point is, have you ever bought something with the intention of never letting it go? If you do that with stock, then, you know, the people that believe that a discounted cash flows of future dividend payments equals the price of the stock, then that's how that calculation would actually work. Most people don't own stock, but going back to the 1950s, the stock market was very, very similar to the bond market. And you bought stock based on dividend payments. And by the way, I think you're earning almost 7% right now on dividend payments if you own the S&P 500. Is that right? Does anyone know if that's right? So that's what I say. So I'm proposing, like, you've never. I thought about it this weekend. I talked about it with my wife. I'm like, you know, I don't know if it's now or in a week or next month, but you know, it might be an opportunity to buy European banks and hold them forever, like maybe 20 years, let's say, you know, and then when I'm too old to work, I need to cash out of something, or say, hey, remember I bought Barclays at $7? Barclays. Do you know what Goldman Sachs is selling for right now? It's come down. It's like $120 something per share. Barclays has twice the market cap and twice the assets, and it's not 126. It's not 100. It's not 99 or 80 or 75. You can get it for less than 50 or even 40 or 30. 25 would be too much. 20 would be ridiculous, but 10 is too much. You could buy Barclays, I think, for like $7. Twice the size of Goldman Sachs, which is selling at 126. Now, of course, that's a function of how many shares are out there. But you're like, I don't know, maybe if you do proper analysis, maybe it's oversold. Yeah, so Debista says, you know, maybe you're the one that's, you know, buying distressed. And the way to get the return on something like that is to hold it, right? Fred's like, what's the symbol, Barclays? No, but the point is, why aren't you thinking about it? Like, what do you mean? What's the symbol? Like, right? So, yeah. So, anyways, yeah, hold for a year or two, DeBeast. Come on. I'm talking 20 or 25. Literally, put it in your will. Put it in your will for your children or your grandchildren. Right? All right. So, anyways, where the hell are we now? Something about, yeah. Oh, New Zealand. Maybe that's where it came from. Look, if you plan on buying it, buy it, and buy it at the right price. Use your stop, and maybe your first, the way to manage it in a scenario like this is you have your stop at break even, and there is no target. What if you're still long Kiwi yen 5 years from now? Why not? As long as you don't lose money, right? What's the dividend? What's the value of dividend payment, not discounted for future time value of money? What is the, if you want to call it a dividend payment of owning Kiwi yen per year? Let's do it on a per year basis. 2.73. Now you have some leverage involved, don't you, Nabista? Or do you literally have a cash account at a bank in New Zealand? What if you're leveraged 100 to 1? So, because you're leveraged, you're earning over 200% return on investment just out of yield payments. Cash flow, guys. 200%. Plus all the pips. And you're long hundreds, maybe thousands of pips. One standard lot times what? 100 pips is 1,000. Up 1,000 pips is 10,000 bucks. You could be earning $10,000 a year plus $2,000 a year, long $1,000. Now we're talking thousands of percent return per year. Oh, well, that's what hedge funds do. So anyways, man, how do I get this? You should look up John Taylor, FX Concepts, the very first Forex fund. This guy paid himself $125 million a year based on IRS tax records. His annual income for like decades was $125 million. Basically the first independent Forex trader that wasn't working for a bank. Started a hedge fund, got investors, then got institutional investors and stuff. And you know what? They basically didn't make any pips. John Taylor, FX Concepts. Okay? He wasn't in it for the pips. It was only yield. So just imagine someone that just has a stop break even on everything and is just earning yield. And if something went up 1,000 pips and came down 1,000 pips, it didn't matter to him. Yeah. So, it's that world doesn't exist right now because yields are so low. But I want to always put that in your mind where maybe the secret to getting filthy, stinking rich in Forex is being able to jam your stop on a long Kiwi yen. And if you survive the summer, why take the 300 pips? And if fall moves you back up and we're back up to 80 on Kiwi yen, why take the 1,000 pips profit? And maybe in 5 years from now, they're raising interest rates. Now, here's the interesting thing. They could, if macroeconomics come back around and the world starts improving, now you're getting a raise. If interest rates go from 2% to 3% in New Zealand, which used to pay almost 9%, you're making 50% more money. And you get paid 7 days a week. And then they raise interest rates to 4%, and 5%, 6%, 7%, 8%. And you're like, I've been long this for 12 years, and it gets better every day. Because, and again, whatever, it all gets crazy. The numbers get crazy, that's all I'm saying. But you get cash flow. You're holding the pips, but you're getting paid interest payments every day, 7 days a week. Huh, well, now imagine you own a hedge fund of billions of dollars. And you're like, well, I don't really know how many pips I have right now, but I know I have 200 open positions, all with my stop losses at break even. I've been in some for a month, I've been in some for a year, I've been in a few for several years. How many pips do I have? I don't really know. But spread over the portfolio, I make 1,000% per year on interest payments. And all the pips are just bonuses. You're like, if I cashed in all those, I would have 10 years worth of profit, right? And you're just like, wow. Michael Sanders says, so this means buying bonds. It's very similar, isn't it? It's very, 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 very similar, Michael. And in fact, if you work at a bank, most likely you're in the fixed income, commodity, currency department. Fixed income is bonds, right? So the FICC would be like the department you work in. And your boss is not a currency trader. Your boss comes to you and says, yeah, well, we're trying to do we're trying to do an arbitrage on Italian and Brazilian bonds. And, we need to hedge the currency risk on that so that our models work out. So what can you do for us, right? You're like, well, okay, well, and you go through that process. And you're like, that's not really what we do. We don't like doing that. But your boss is a fixed income guy or gal, okay? And foreign exchange just simply means they want to put money in Argentina because they can pick up a huge yield on that, that crazy debt. They're going to hedge it somewhere else for the risk, but they also have the foreign exchange that they face, right? The foreign exchange risk, and you have to come in and hedge your foreign exchange risk for your boss, who's really just in a bond trade. You're like, oh, well, I don't really want to do that for a bank. I just want to make the trades. Boom! You go the other way because you say, I'm a foreign exchange trader. I can get higher leverage, and I can earn the income right through the yield payments, right? The interest payments, and I can earn the pips. So it's very similar to owning the bond, right? But just more liquid because it is cash. You get paid 7 days a week, right? You can get out whenever you want, and the pips are good, and you have higher leverage, right? So I don't know, but it's still very similar to a bond trading. So I have told people for many years that you're essentially a bond trader. So anyways, wow, total distraction. PCE, yeah, watch that, but that you'll already have that in your GDP, right? So you'll break that down. Lots of Japanese yen news this week, right? So, but it comes down to, will the BOJ intervene? Okay. Thursday, jobless claims, great. Consumer price index out of Eurozone, great. I don't know if that's going to mean anything. GDP for the UK Again, I don't know. Like, what's going to stop the bear train? Right? I don't know. Like, I don't know if any of this matters. Generally, you would say, oh yeah, UK GDP, but no, now we're arguing like, when can the UK get out of the Euro EU, right? Right? So it's just like, we're just so distracted by all of this stuff. So it's really these ECB meetings and speeches and stuff, because we just want to know, like, when can we get out? What's going to happen? What's going to happen in the Euro? Hey, is the Eurozone going to go in recession? And, it's that kind of stuff, not like common rational, like, oh, well, let's update our CPI models for the Eurozone. Now, an efficient market, theorist crackhead would probably say, no, they're going to treat this logically. I think they're going to ignore it and just do whatever they want to do. And so I don't know. I don't know what this is going to do. Tenkan survey is really important for the Japanese yen. It's sort of the common man outlook here. But again, usually not a crazy market mover. But every day you see how there's just like lubrication for the Japanese yen. Day after day after day. You should probably trade Asia, guys. The Asian foreign exchange community is going to wake up and, I don't know, buy Japanese yen. Buy Japanese yen, buy Japanese yen. Excuse me. And then, if things go well, which means if things go horrible, the Japanese yen suddenly gets another big wave. We make another low, right? We get well below 100 again on USD yen. And what happens? Bank of Japan, boom! And we get intervention the other way. So, I don't know, pay attention to Asia. Right? And then, of course, in this particular day, which is Thursday, which is Friday Asia, news out of China. And that's a nice market mover. Okay? So, in particular, this one. Tenkan is actually a good one for Japan, too. So, to mix some China news in there, fantastic. Okay? And then Friday's Canada Day. Already bought my fireworks. Yeah, I drove to Alabama and bought fireworks for Canada Day. Whoop, whoop, whoop. What was that, Ray D? Yeah. So I'm working my way into Georgia culture. All right. Swiss retail sales? Nah, skip it. Euro PMI, pound PMI, skip it. Euro unemployment rate? Wait, okay, fine. And have you ever noticed that if you look at the employment rate and the unemployment rate, they don't add up? But yeah, that's interesting, right? ISM manufacturing. Okay, yeah, okay. Now we're getting into sort of, the meat here. Should we, skipping past all the UK Euro nonsense, how's the US doing? Manufacturing, we're more of a service industry. We used to watch manufacturing, as you may remember, we used to watch it for trickle-down economics when this was like, a low number. You might remember I said, do you want to know when the average Joe is feeling the positive effects of the policy at the Fed? And, I think we got that. I think people that work in warehouses and in factories, they did go out and get new car loans, and right? They did go out to Sam's Club or Costco and buy a giant 4K TV. And yeah, so I think we need to then move away from the manufacturing part and then refocus on the service part. The other argument to that, remember I'm in college, so you always have to have both arguments for everything, right? So the opposite argument is is the strong dollar hurting the manufacturing industry? So is this a contracting number, right? But 51's fairly okay. Oh, and then the rig count. Okay, the rig count. That comes out every Friday. And the trend that we've noticed after the last, 3 weeks, the rig count's going up. Therefore, oil prices should be going down. And guess what? Oil prices have been going down, but I told you first. I told you the first week that we saw, I think, 3 rigs come online. You were not reading that in other places. And oil was still going up. And we were at like 50, 51. And I'm like, you know what? It's supposed to start coming down. And now it's down, 12%. Yeah, you're welcome. It's what I do, though. It's my obligation to you. And I think this works again. Let's test this. What? It don't work none? Is that right? It's not working, is it? Oh, dang it. Well, the major change that is people getting out of CAD, I think, is the big one. So that's too bad that didn't work. I thought that was fixed. Yeah, it's the service provider. I've actually, redid the code and stuff. So, in classic fashion, it's not me, it's them. It's not my fault, it's their fault. Too bad. Now, I do believe the euro is right, but right, a week ago it was 115. Yeah, so this is as of last week for euro. Okay, but I believe if you look at, you'll have to download it from the CFTC. And I believe the bigger move is the Canadian. Okay, so let's move on to the next thing. It's a new week, and we need to try to catch pivot points. And I almost did a video. I was at my desk at the open, of course, and I almost made a video to post, and then I talked myself out of it because normally I'm a buyer in a situation like this, for example, and I said, you know what, there's no way that that's going to happen. This is not your usual market, right? But usually if you open the week at M2, I'm going to take this north. And instead, I didn't. Right? That's it. There was a little bit of, thought here where this goes back, fills the gap, and the gap is here. This is just standard gap strategy, right? So you want to fill this gap, and then very often it continues mission down. And I thought about it, and I thought about it, and I thought about it, and I'm like, nah, I'm just going to scalp the hell out of it. Nah. So I did take a screenshot. I thought you'd find it funny. But this was a few hours ago. This shows 21 scalps in a row. Consecutive wins, 21. Consecutive losses, 0. That for today. 400 pips the happy way. So anyway, so I decided to just sell the hell out of it because that was like 3/4 of the trades were pound dollar short. Callahan says worked at euro dollar. Well, yeah, euro yen. I mean, yeah. So you're either buying yen or buying dollar. Euro's coming down because Brexit's not good for euro. Pound is coming down. It's not good for the pound. So anyway, I went through that decision process, and I noticed we opened right at the spot we were to open for bulls, and I just wasn't ready to make the call. I'm like, normally I would long this. Oops. Normally I would long here. Feeling like we would at least fill the gap, and then I jam my stop, and if it comes back and knocks me out, so what? But if I get it right, then I'm going to go to M2, M4, right? But also the other thing that scares me, because that's your typical normal market pivot point trade, but like, look at this mess up here. Those are all the monthly pivots, right? And I'm like, there's no way the weeklies are going to be logical and intelligent if the week is looking at last week's low and last week's high, which was actually yesterday's low and yesterday's high, and then make intelligent pivot points, right? I'm like, yeah, I don't know. That doesn't feel right. And do you want to know like an inside secret? When the market was closed, about an hour before, Société Générale, the big French bank, made a call. They're like, we're shorting, or we have shorted at 37.50. And the interesting part is, the market for me was closed at 36.50. I'm like, well, where did they get that liquidity? I guess apparently they can access the interbank system an hour before me. I'm like, how did the French get short this 100 pips above me and an hour and a half before me? And I'm like, I wonder what's going to happen. And then it gapped down 200 pips, but they were already short 100 pips above me. So somehow they got in a trade, maybe called New Zealand. Hey, New Zealand, good morning. By the way, we want to drop $1 billion on this pound dollar. And they got a price that wasn't really available to the open market, but apparently somehow they got their fill. And then, of course, it dropped. Now so they're short 37.50, and we're looking at 31.50. What? They've made 600 pips today, so far today. I'm like, what? You scumbags. Nick, they're just scalps. So they're like, well, 20 trades, right? 400 pips, so 20 pips. And there's nothing, right? It's just nothing. Just putts. I mean, they're putts, right? Yeah. Yeah. Nothing magic. Boring, really. But there you go. Well, no, but it's just it's the market moving. It's not like I did anything intelligent or impressive. The market's falling. I mean, I don't know. I mean, that's it. It's just there's nothing glorious about it. It's just, isn't that what we're supposed to be doing, right? It's just, yeah. I mean, the pound was falling, and so I sold it. And I didn't know, I could have held them longer, obviously, but I just didn't know. I don't know. I'm out of weekly and monthly pivots that I can know and trust. And my personal opinion in situations like that is that means additional risk for me. So like last week during the crisis, during the collapse here, I used weekly and monthly pivots a lot, like a lot. Huge importance. And now I don't have any, and now I don't even trust them because I'm like, wow, last week is a weird week. And are people really going to buy at M2 and go to M4? Right? And M4 is where? 52? I'm like, that doesn't feel right. We're going to go from 34 to 52, and that ain't happening. And then all of a sudden I'm like, well, then forget this. Forget it, right? Forget it. So, to me, when I have to like ignore the analysis, is risk for me. So might as well just putt. So anyways, it's the same crap that I've taught you guys every day for years. So there was my thought process with pivot points and stuff. I don't know if I can trust them. So I might have to wait till July, which is, next week. But so, here's another prime example. Here's a trade, right? Look, I shorted it on the pullback to the 21. Yeah, that's radical. Right? Radical trading, Wayne. Woo! Sold the pullback to the 21. Sold the 5A cross down in a falling market. There's no magic, guys. It's not spectacular. It's not, some tricky finesse master of complicated trades. I shorted a 5A cross. It's not a huge trade. This is, just a play account. But, if you're short at, almost 104, or 110, and now we're at 190, so, it's a few $100. It adds up. Right? 100 pips, 100 there. 100 pips here, 100 pips there. Pretty soon it adds up to real money. But the thought process is that there's nothing stellar, nothing complicated, nothing, magical. It's just, those are the trades I teach you to do. That's it. What scalping do? Move your stop losses. There are two ways of doing it. So this one I'm saying, you know what? I kick it off this 21. New York's opening. Maybe I'll hold this longer. Instead of picking up 25 pips, maybe I'll go for 100, 150, right? But very often when I'm truly just scalping, so let's say at the beginning of a London session and I don't really know which way it's going to go, my favorite thing of all time is putting. 25-25 OCO. I just love 25-25 OCO. Just set it and forget it. Is there an EA for OCOs? Yes, I use I use something called auto stop. Okay. So in this setup here, when I place a trade on the chart, it throws down a 25 pip stop, 50 pip limit. So profit target, right? And so when I make a decision, I'm like, okay, I'm going to scalp for the next few hours. I might do 25-25 OCO if I don't really want to manage the trades at all. And sometimes I'm like that where there's two scenarios where I plan on trading multiple currencies at the same time, and I just don't want to deal with the management side. So what I'll do is 25-25 OCO, and I win or lose. I don't even really care. Most of the time I'm going to win. Because you think of it, the spread between the winner and the loser is 50 pips, and on a normal day, that's like half of an average daily range. So, it's enough, right? But sometimes I'll play it more logically and like I had it before and say, well, I'm willing to risk 25 pips on these pullbacks, but I believe we're trending, which means it'll fall farther than it'll retrace. And I've already let it retrace. So let's say I'm retracing back to the 15-minute 21. Sell. 25 above, 50 is the target, because if I have a Fibonacci retracement to a 21 dynamic resistance, then it's supposed to make a lower low. So if I'm risking 25, I'll probably be able to pick up 50, but it also gives me enough room where I might decide, based on the way it's behaving, that maybe I only take 40 or 35. And just there's enough room in there where I can decide, so like I may look and say we're up 43 pips profit, but I'm sitting on the monthly S1. Do I have to be stubborn and say, well, I had a 50 pip target? No, I just say, it gives me enough room so we come down here to monthly S1. And I might just say, well, if we get down to 109.50, which is another 25 pips below, I might manually get out. Is there a limit there right now? No. Okay, my limit's way down there. So it's one of these situations. Maybe I'll get out at monthly S1. It is a double bottom. I'll make about 100 pips. Not quite, 75 pips, let's say. Excuse me. That's reasonable for one trade. I'm already up, hundreds and hundreds and hundreds of pips today, so why not? Or I say the reverse, and I give myself the opportunity now because I'm not committed. I say, well, I've already made hundreds of pips today. I've already, I'm good for today. What if I just look at this as opportunity cost? And what if I decide the way that New York happens, let's say we don't bounce at that double bottom, I might just move the stop to break even and say, well, you know what, I might be in this trade all week. Right? Because let's say you made 400 pips versus 500 pips. You still have a great day. It doesn't actually change anything, right? Well, how am I going to make 500 pips tomorrow if I made 500 pips today? Doing it scalping wise is in a typical market is just too much work. No, we have atypical markets, right? But I might say, well, you know what? If I've already cashed out of all those little putts, why don't I just jam the stop on this so I can't lose any money? And let's see if I can pick up 300 or 400 or 500 pips on this trade. I'm already in it. I'm already winning it. I don't need more for today's goal, but maybe it'll pay for tomorrow's goal and the next day's goal. So maybe I'll just move that. And it is conceivable euro dollar falls all week, right? It's within the realm of reasonable possibility. We do have market conditions like that. There is lots of risk and uncertainty, right? To the euro, for example. All right, so I don't need any more pips for today, so maybe this will pay for maybe I'll turn a good day into a good week. As long as I don't lose money, what do I care? Right? So you see how there's like a detachment? Okay. Zelda says, where can I download that EA? Well, it's not mine, but I believe it does say, and I did buy it. Let's do it again. Let's do the time warp again. Go to fxautomated.com, and that's his. Okay. I'm not advertising it. I'm not selling it. I don't make a commission. I'm not promoting it. I'm not recommending it. Just there you go. It is what it is. Have fun. My pleasure, Zelda. Let's do the time warp again. So, yeah, what's going on in the world? Let's take a look at various things. Just glancing, the pivot point, the central pivot point for copper held beautifully today. Go copper. And it dropped, of course. Um, Gold is just moving sideways, waiting. It's funny that it's waiting, yet Pig Dog and Euro Dog, are already moving down. Chinese renminbi is continuing to weaken. Telling you that's going to make Japan want to devalue if China's devaluing. Or maybe the dollar's just ripper strong, right? Well, dollar is making higher highs. The central pivot point did act as support. I don't know if you caught that on the 4-hour. But beautiful opportunities if you're a bull on the Dixie. And oil is coming down. So let's go over where I was wrong on gold. Okay. We did have it set up for a potential head and shoulders, except it went up. Okay. And that's that. Did we get through the pivot points is the next question, right? You see the monthly R2? So again, I'm burning this into your brain. This is supposed to be the top of the month of June. Right there. Okay? This line right there is the projected top for gold for the month of June. We knew this on June 1st. We've had Brexit, which is plausibly one of the biggest fundamental events of the decade. Now, the interesting thing is we have 4 days left in the month, and currently that's the top. I love it, man. I love that there's still logic in the world. Right? Somebody big has, targets. They're targeting that. Okay? Now, the downside seems pretty crazy. But again, all logic starts to wane when you get closer and closer to the event risk itself. But after the event, it's remarkable how it's still reasonably important. Doesn't mean we can't go higher, but when you look at it, 1350 seems to be important, and 1343 is the logical, intelligent, predetermined top. Now, you might want to throw in an R3 in here, but I don't have that for you, unfortunately. Okay. Could be options expiring up there. Yeah, I guess so. Okay, so that's gold. Here's the oil. Okay. And it did come down. Do you notice the hammock? Okay, that's why we have this purple area outlined. It did eventually make a lower low. And in a scenario like that, you measure the top, you measure the bottom, and then you measure the 382, the 50%, and the 618, and you look to sell. Okay, now you're also doing things like, obvious resistance and all that kind of stuff. There's a cycle level of 50 up there, not the most complicated setup in the world. And okay, and your sell zone is that between those two blue lines, between the fibs. Using Fibonacci, I call it the sweet spot, the 382 to 618. So that's the logical area to sell, throwing in the psych level and all that kind of stuff. And, well, that seems to be happening to a reasonable degree. Now, as you recall, our plan 100 years ago was to buy it up to 50 and then bring it back down. All of this was up, if you remember, up, 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 down. So now the question is, and we don't know this, but can we continue the lower high, lower low scenario? Okay, we don't know. In here, approximately 3 weeks ago, I brought it to your attention. So it was probably about in here. Because I remember it's still going up. Somewhere in here, or let's say in here, I brought it to your attention that that oil companies were turning their rigs back on. And if rigs were being turned back on, frackers were likely to be turning things back on as well. So, I was preparing you. I don't, like I said, I don't know if it's going to be that day, that week, that month, but we can look at it with logical, intelligent, data to support our theories. That sometime soon, one would assume that turning rigs on will eventually go through the supply chain and add to inventory when when demand is likely to be unchanged. And I believe I drew the supply and demand curves and showed you the change in equilibrium prices. Can anyone else confirm that besides Callahan? Do you guys remember doing that? The supply and demand curves and the change in equilibrium prices of oil? Showing how the supply and demand would change price to the downside? Oh, the helicopter companies transporting staff? Wow. All right. That's just ridiculous. Did you buy the... I do remember talking about that, although I think that might have been last year, not last month, but maybe I'm wrong. But yeah, I do remember talking about that. I said there are companies that have dozens and dozens and dozens of helicopters in Louisiana, and their job is to take oil workers to the oil rigs. There's like 3,000 rigs, right? They fly them out and bring them back. Fly them out, bring them back. Except they've mothballed all these rigs, so there's no one to fly out there. Like, probably a good time to buy some helicopters, right? Yeah, or you make a trip down to Louisiana and say, I like the helicopter lifestyle. And I believe in the oil industry. I like Texans and Dutch and Canadians. So boom, let me invest. Let me give you some cash to hold you through the down times. And I am sure oil's coming back. So you get yourself into helicopter businesses and all that kind of stuff. But whatever. So yeah, good. So I hope you make tons and tons and tons of money, Callahan. I like bourbon now. I've gone from Scottish whiskey to bourbon. Wow. I like cigars. I like French wine. I like Napa wine. Mini lot short. All right, well, I need a pair of brown shoelaces. My old ones are worn out. Who has time to go buy shoelaces, right? You ever break your shoelace? You're like, oh, this is going to be the end of the world. Where the hell am I going to get shoelaces? Now I got to go to Target or something. Like, why am I going to be at Target? This is going to take 2 hours of my time. It's going to be like $5,000 shoelaces. Oh, forget it. Just buy a new pair of shoes. Buy them online. Yeah, duct tape. Yeah, just go online, buy a new pair of shoes. So anyways, oil looks like it may be toppish. The other thing is I also, at this point, don't believe it needs to go back to 20 either. And this is what I was saying earlier about the pivots and is the pound going to fall and continue to fall and drag the euro down with it? Is the yen going to stay strong? Is the dollar going to stay strong? And my illogical, unintelligent answer is, I think so. Yeah, but not because of pivots and such, just because it's what's happening now. Yesterday was a rainy day. Today is going to probably stay rainy. Not a lot seems to change. There could be a lot of people still on the wrong side of the trade. Rumor is our buddy George Soros was on the wrong side of the trade. Did anybody hear that whisper? Mr. Soros was long. I was on the wrong side of a couple of trades when Brexit came out. Quickly took a loss and quickly made it back. We should probably talk about that. What was my advice to you the day before Brexit? Was this an opportunity to make a huge amount of money? Or what would the basic goal of a fund manager be? Now, I didn't say don't trade. Capital preservation. What I said is, if you made a lot of money and you were showing your investors your stats or trying to recruit new investors, you made a lot of money, you could really disappoint a lot of people and say, holy crap, did you risk my capital, my money on Brexit? You're like, yeah, I made like 20% return. Did you totally gambled my money on Brexit? I thought you were a money manager, not a degenerate gambler. What the hell are you doing? You're not supposed to make 20% in a month or in a week or in a day. You made 20% return in a day? Give me my money back. You're lucky I don't sue you. That's not in the disclosure document. You told me you're risk averse. The hell is this nonsense? You're fired, right? That was my advice to you. Now, even worse than that is, I'm sorry, but I lost 20% of your money. They're like, 20% of the money? What the hell happened? Oh, well, I overtraded on Brexit. You what? Yeah, I just got excited and I just everything went to hell. I just went and ate shit with your money. But you should be happy, sir, because I was down 50%, but I made it back. Your stomach is just, even now, actually funny. My stomach's rolling. It's so upsetting. Have you ever been down 50%? And you're so happy you've made it back, so now you're only down 25%? Oh my God. I'm stressed for you. So for me, yeah, I did a lot of trading, and I did take a hit on the beginning. The portfolio was thinned. I was in some things I couldn't get out of, and who knows, maybe things go my way. They never go my way, by the way. So anyways, I had to take a couple of big losses, but I couldn't get out. I don't know. I made the decision. What can I say? But stops were in place, and I took a slap in the face. And with logical, intelligent, I did make a couple of bad trades I regret. There's no doubt about that. I bought at some monthly pivot points when it was a tsunami. I mean, the tsunami doesn't care about the wall, right? So, okay, so I made a couple of mistakes in there. But at the end of the day, if you look at the portfolio, nothing happened. I'm like, great. I'll probably hit my goal, make, somewhere between, 3 and 5% for the month. And if you look at it over the course of history, you're like, oh, well, just, it won't even come up in their mind, right? If they saw plus 20 or minus 20, they're like, oh, in June 2016, oh, that was Brexit, right? You know what I mean? Like that would stand out and they're like, oh, that was Brexit. You got caught up in Brexit? Like you had like 2 months to prepare for that, right? Like, were you not prepared? Or were you just a degenerate gambler? Which one? How do you answer that question? Hey, Rob, did you simply not prepare? Or were you a degenerate gambler? You're like, I'm sorry, I'm out of time for this meeting. I have to go now. My lawyer won't let me answer that question. You're like, boom, you're caught in a corner, right? So it'd just be better that if they look at your results and they're like, this guy's really steady, just really steady. Nothing stands out, right? So, just there's some ups and downs, and they're like, oh, well, this was a particularly good month. Oh, well, yeah, that was the market. We had prepared and we built a position over the course of 3 weeks, and then, it finally broke out, and we had a bunch of risk-free trades that just worked out that month. They're like, oh, well, that's why the volatility was low, but the returns were good. Okay, good. We like that. Yeah. That's what investors want to see. So anyways, that's what happened. Good, right? Brexit came, Brexit left. It'll probably be an all right month. I think that's what investors want to see. All right, or you can invest in the stock market. Holy crap, huh? Look at this. Or you can invest in the stock market. There may be some volatility associated with investing in equities. Well, Zeal says, great, thanks for the great advice. Well, if I may, isn't it more than the advice? Like we talk about on Thursday, here it is Monday after Brexit, and this is how the conversation is still going. This is how I feel, this is how I act, this is actually what happened. Right? I'll have an average month. Yeah. Good. Yep. So there's one thing about advice like, oh, I read in this book somewhere that you guys should really be risk averse. How many gurus out there just simply read 10 books and suddenly they're experts? All right, so anyways, stock market. Yeah, well, eventually you're going to need to buy. Yeah, eventually, huh? Check this out. We've had this drawn for months and months and months. Look how close we got to that. 2,000, right? So where would you buy? Oh, look how long we've been going. I'm sorry we've been going so long. Sort of like our discussion about European bank stocks, are you going to exit the S&P 500 forever, or would you like to own it? Now, one of the things I've been discussing is how screwed up the market is. Not the financial market, but the players in the market. I've been reading, and I don't know if you've been reading, but one of the things I've been tracking is how much money is flowing out of hedge funds because hedge funds are not making good money, and certainly not enough money to justify giving up 20 or 30% of the profits, right? And all the money is going to stock index ETFs or mutual funds or other investment vehicles, right? Is anyone reading about this? Okay. And this is the stuff that really gets me upset. Because that is what you were supposed to be doing 7 years ago. When the Fed comes in and prints money, the stock market goes up. Everything goes up. You don't need a hedge fund to buy anything because everything is going up. Is it the free market doing it? No, it's the Fed doing it. Quantitative easing is designed to increase asset prices. The stock market goes up. It didn't matter what you buy. You just buy something, anything. Wake up. Bank of America's at $5. Buy it. What the hell you want, right? Citibank, I think, was 89 cents. It's now like $900 a share. I mean, it's just like everything was going up. And at some point it was risky. where you had to buy and hold your breath. But after a while, it was like simply the stock market was going up and up and up and up for years and years and years and years. Why the hell would you be in a mutual fund? Or, I mean, a hedge fund. A hedge fund is designed to work in sideways and in particular down markets. That's why they call it a hedge fund. And hedge funds don't work particularly well when the stock market's going up, because if the market's going up 20 or 30%, well, then the stock market, or sorry, the hedge fund is going to have to make 50 or 60 or 100%. Well, that's kind of crazy, because now you got to do that, you will need a lot of leverage, right? So you wouldn't be in a hedge fund in those market conditions, and if you were a fool. All right, so you should have been in a indexed low fee fund because everything was going up and it didn't matter. So you wouldn't pick on individual sectors. You would hedge your risk by being in all sectors. And you're going to increase your returns by lowering your fees. You don't want to pay some guy 20 or 30% when any idiot could just buy the stock market, right? So you buy the cheap index. And by the way, when we were at the lowest point in the stock market, that's what I was doing. I was begging people to sell me stock indexed future type vehicles, right? And they were not that easy, but you know, anyways, so you get yourself a Vanguard or something, right? Right, great, fine. So now here it is, 2016, and this is what I'm hearing. Money now is pouring into these vehicles because hedge funds have performed so poorly. And I'm like, you have got to be kidding me. Are you serious? Now you're doing this. And in true like fashion, market mechanic fashion, that's the dumbest idea ever. And it's like 5 or 6 or 7 years late. That is just stupid. But yet that's what the whole market's doing. So when is a hedge fund going to perform well? When the stock market's only expected to go up 5 or 6% a year, or maybe fall 5 or 6% a year. And now you need someone logical and intelligent, someone that can do the homework and pick the right sectors at the right time and the right stocks inside each sector properly, and then have the tools and intelligence to use the tools to be able to hedge the risks out of that. So you know you need to look at not just, bonds, but also options and swaps and other things, and futures to buy this and hedge that and squeeze out the spread between the two and then pick the right stock on this and get out of the short this and long that and do all these complicated things a mere mortal couldn't possibly do and squeeze out 25% out of the stock market with low risk and volatility, when the stock market itself is only going to produce 5 or 6, right? But everyone's going the opposite way, and they're buying index stuff. Well, but it's only going to go up 4% next year. Or look at what we're looking at now. You want to buy a stock index vehicle here, but with just buy and hold everything versus doing it here? Like, you see how just ridiculous it is? Now you want to move away from your smart manager with sophisticated tools. Now you should be moving into hedge funds and out of it's like, oh my God. And to me, I'm always flabbergasted that the market is always, it seems like to me now, is just, the market is stupid. And this idea of efficient market hypotheses where everyone in the market is logical and intelligent and always does the right thing because it's so obvious is completely backwards. The market is stupid. There's all kinds of inefficiencies in there. And that's just another example of, now you have to actually pick individual stocks if you want to make money in the stock market. So everyone's going to move to a broad index. All right, fine. Good luck with that. And this is why the rich get filthy, stinking rich, and the poor never make it. Is this today, Tabista, trading suspended on Barclays and RBS? When just today? Yeah. Oh, and I didn't say buy Barclays. I asked you if you were interested. Oh, yeah. And then the other thing is, it may not be today, it may not be this week, it may not be this month. But if Barclays is at 8 or 7 or 6 or 5, and you think Barclays is around for the next 50 years, when you're too old to work, then your money should be working for you, right? And you say, oh, I remember when I bought Barclays at 7. Right? And now Barclays buys you a condo or something, and now you can live in West Palm Beach in a little tiny condo with a nice view. And you could summer. Oh, we summer in Boca. Right? Yeah. Right? If you want to summer in Boca, you better be smart with your money. A little like the Ford bond. Yeah, that's true. Ford's paying almost 10%. Do you want to know how billionaires do it? And how you... Oh, no, I should probably leave this for a different conversation. But there are vehicles out there where you can buy into an investment with a billionaire, or let's say 2 or 3 billionaires. And you can tag along with them. And the cool thing about it is the billionaires put their, they put in, let's say, 100 million each. So there's 5, let's say 5 billionaires. They all put in 100 million each. So the value of this, you would think, and then let's say they take all that money and they put it into shopping malls. Whatever it is, or bonds. Actually, shopping malls doesn't sound right. Just foreign bonds. And there's a manager of the firm, not the billionaires. They just throw the money down, and they hire a manager, and the manager just buys foreign bonds. Some of them are quite risky, and they plan on never. They don't trade them. They just buy them. So you can lose money when you're trading, but they're like, all right, well, we'll lend Argentina $50 million, whatever it is, or a company in Argentina $50 million, and it's going to pay 12%, and and it's over in 3 years, and all this kind of stuff, right? They make these investments all over the world in all different types of things, and hopefully it's hedged and all this kind of stuff, and it's completely sophisticated, but it is transparent in the sense that the market cap of the investments. You may not know all the individuals investments, but you can know what they're doing. You can know the market cap of it, and you actually know who the investors are. So you're like, oh, I'm in this with 5 billionaires. And the interesting thing about becoming an investor along with them? You can usually get in at 80 cents on the dollar. So you might have like $10,000 in, knowing that the guy next to you has 10 million in, and the guy next to him has 100 million in. And you all own equal share of, you own $110,000 of this thing, but it's a closed-end fund. If you're ever interested in something like that, you should look into that closed-end bond funds. And just say, yeah, I roll with the billionaires, yo. So anyways, I've taken way too much time. So I apologize for that, but I guess a lot going on, a lot to chit-chat about. Maybe too much coffee, too much adrenaline. But another great trading day. And how long is it going to go? I don't know. So until it stops, right? So I think I'm going to just keep shorting until that stops working. But I don't want to risk anything either. So I'm going to maybe make 150 trades this week, and then go into it's a holiday, by the way. It's, like I said, Canada Day on Friday, 4th of July on Monday. So yeah, I think between now and Friday, things might dry up. What happens next week is going to be a big question mark. So like I said, trading Asia might be fantastic this week. So peace on earth, may the pips be with you, may your profits be above average, and I hope you post some trading ideas on Forex.Today. Like, sit down and come up with a real trade plan. Okay? Tell us where you're going to put your money, how you're going to trade it. Remember, because you're actually documenting it to yourself. And if you're really hardcore, you should do all your trade plans and post them up here and create your own trade journal. And it's the trades before you take them. Do your analysis, say, I'm going to sell here for these 5 or 6 reasons. Here's the hourly chart, here's the 15-minute chart. This is what I'm looking at. Maybe you pull the trigger and take a screenshot and show where you're in. And when it's all done, you'll have your own trade journal that you can go back and review. If you just want feedback and to chit-chat with your buddies, go to the activity feed. Okay? And then, of course, as other official trade plans come in, this is also updated. So you can see Marina's on here, Pip in the USA, so on and so forth. Okay? Oh, and don't forget to add an avatar, add a photo. Okay, guys? Because these are all the active members on the site right now. You can see almost nobody has photos. So the way you do that is you go to your dashboard. And, or maybe it's not dashboard, profile. You go to profile. I guess I could have just clicked there. And add the photo. Would you do that? Okay. And it'd also be cool if you put your country, right? We don't need your social security number. Put your country here under location, and that does pop up under your picture, so you can just say, oh, Marina, South Africa, right on. Cool. So again, thank you for being on my team and being here every day and your loyalty and stuff. You know, it's your positive energy in my life, and I appreciate that. So I'll see you tomorrow. Cheers.